Hello everyone, welcome to my channel HD ORION. We are studying accountancy for class 12 from T.S. Grewal's textbook, Accounting for Partnership Firms. Chapter 1, Accounting for Partnership Firms Fundamentals. And in this video we will study preparation of profit and loss appropriation account and partners capital accounts. So let us see some questions from the textbook. So before we proceed, let us see the specimen of profit and loss appropriation account. This profit and loss appropriation account is an extension of profit and loss account, and it is prepared after net profit or net loss has been calculated. Fine. So net profit is always a credit balance. So if there is a net profit earned, then it will be shown on the credit side of profit and loss appropriation account. And if it is a net loss, then it will be shown on the debit side of profit and loss appropriation account. Now, as the name suggests, it is the appropriation of net profit. Appropriation of net profit to the partners in various categories. Like partners have to be paid interest on capital, then salaries or remuneration or commission to partners, and there can also be reserve to be created out of net profit. Fine. Whereas on the credit side, you can collect interest on drawings from the partners, and the remaining profit or loss will be finally distributed to the partners in their profit sharing ratio. So if there is a remaining distributable profit, then it will be shown on the debit side of profit and loss appropriation account, and if it is a loss, then it will be shown on the credit side of profit and loss appropriation account. So all the items shown on the debit side are the appropriation of profits in the form of interest on capital, salary, remuneration, commission or reserve to the partners. The reserve is also an undistributed profit. It is created out of net profit. Fine, it is not a charge. So all these things are appropriation of profit. These are not charge against profit. If they are charge against profit, then it has to be treated in profit and loss account, not in profit and loss appropriation account. Now let us see some questions related to the topic. So question number 51. Amit and Vijay started a partnership business on 1st April 2022. Capital invested by them were rupees 2 lakh and rupees 1,50,000 respectively. The partnership deed provided as follows: interest on capital to be allowed at the rate of 10% per annum. Amit to get a salary of rupees 2,000 per month and Vijay rupees 3,000 per month. Profits are to be shared in the ratio of 3:2. Net profit for the year ended 31st March 2023 was rupees 2,16,000. Interest charged on drawings was rupees 2,200 for Amit and rupees 2,500 for Vijay. Prepare profit and loss appropriation account. So let us see how it is to be prepared. So net profit as given in the question will be shown on the credit side of profit and loss appropriation account, because net profit is a credit balance and it is given rupees 2,16,000. So this is the net profit, and all the appropriation of this profit will be shown on the debit side, which will be transferred to partners capital account. Fine. So to interest on capital, as given in partnership deed in the question, to both the partners Amit and Vijay. Amit's capital is rupees 2 lakh rupees, and the rate is 10%, so 20,000 rupees for Amit, and Vijay's capital is rupees 1,50,000. On this again 10%, so it is 15,000. So out of 2,16,000, 35,000 is appropriated to them as interest on capital. Then there is salary suggested, so to salary to partner Amit at the rate of rupees 2,000 per month. So 2,000 multiplied by 12, it is equal to 24,000. Then to the other partner Vijay at the rate of rupees 3000 per month. So 3000 into 12, that is 36,000. So in this way, next 60,000 is paid to them in the form of salaries to the partners. Now there is interest on drawings to be collected from the partners by the firm. It will be shown on the credit side by interest on drawings. So this the firm has to receive from the partners. These are the things which the firm has to pay to the partners. Find interest on drawings from partner Amit is rupees 2,200. It is given in the question. And Vijay, it is 2,500. So 4,700. Now the remaining profit will be given to the partners in their profit sharing ratio. So let us give it to profit. This is also known as distributable profit or divisible profit. In their profit sharing ratio 3:2. So when we get the balancing figure here, we will add this and we will subtract this. So grand total here is rupees 2,20,700. This credit side is more, so as a credit balance we get rupees 1,25,700. When broken in the ratio 3:2, first partner Amit will get rupees 75,420 and Vijay will get rupees 50,280. Now all these items will be transferred to partners capital account to the credit side, and this item interest on drawing will be shown on the debit side of profit and loss account. That is what double entry system is. Now question number 52. A and B are partners sharing profits and losses in the ratio of 3:1. On 1st April 2022, their capitals were rupees 5 lakh and rupees 3 lakh respectively. During the year ended 31st March 2023, the firm earned a net profit of rupees 5 lakh. The terms of partnership are: interest on capital is to be allowed at the rate of 6% per annum. A will get a commission at the rate of 2% on net sales. B will get a salary of rupees 5,000 per month. B will get commission of 5% on profits after deduction of all expenses including such commission. Partners' drawings for the year were: A rupees 80,000 and B rupees 60,000. Net sales for the year was rupees 30 lakh. After considering the above facts, you are required to prepare profit and loss appropriation account and partners capital accounts. So let us see the solution. So solution 52, profit and loss appropriation account. To the credit of it we will write by net profit. As given in the question, it is 5 lakh rupees. Because it is a credit balance, all the profits so should be shown on the credit side of brought down. Now this has to be appropriated in the form of interest on capital. For partner A, partner A's capital is how much? 5 lakh rupees, and 5 lakhs 6%. 5 lakhs 6% is rupees 30,000. And B's capital is 3 lakh, and 3 lakh 6% is 18,000. So 48,000 will be given this way in the form of interest on capital. Then to A's commission. A's commission is on sales. Sales is given rupees 30 lakh and rate of commission is 2%. So 2% of sales 30 lakh is rupees 60,000. then B's commission, not B's commission, to B's salary first. B's salary is rupees 5,000 per month. So there are 12 months in an accounting year. So 5,000 into 12, it is 60,000 rupees. Then come to B's commission. About B's commission, it says that profits after deduction of all expenses, means not on this profit but after deduction of all these expenses. So 5 lakh minus 48,000 minus 60,000 minus 60,000, we will get rupees 3,32,000, and then we have to multiply it by 5 divided by 105. Fine. So let us calculate this. 5 lakh minus 48,000 minus 60,000 minus 60,000 multiplied by 5 divided by 105. Why 105? Because the question says that after deduction of all the expenses including this expense. So whenever it is written including this expense, then we have to divide it by percent, multiply it by percentage divided by 100 plus percentage, and therefore it is 105. So when you calculate this, you will get 15,810 as commission to B, right? And then the remaining profit will be distributed in their profit sharing ratio. So let us calculate the remaining profit balancing figure. So 2 profit, and their profit sharing ratio is 3:1. So here 5 lakh and here also 5 lakh because credit side is more, and the balancing figure we get is rupees 3,16,190. When you break this in the ratio 3:1, you will get rupees 2,37,142.5 and 70,047.5. In the answer, in the book, the answers are given in the rounded off figure. Fine, it has become 100 and what's this? 140, and this has become 50 here. So that is how it is distributed. Now we will see partners' capital accounts. So by balance brought down, it is credit balance as given in the question. 5 lakh rupees for the first partner and 3 lakh rupees for the other partner. Now all the things which are written on the debit side of profit and loss account will be shown on the credit side of partners' capital account. So by interest on capitals, it is 30,000 for the partner A and 18,000 for partner B. We have to show separately. And by commission, A's commission is rupees 60,000 and B's commission is rupees 15,810. Then by salaries to B, it is 60,000 rupees. Now there is also drawings. So 2 drawings as given in the question, rupees 80,000 for A and rupees 60,000 for partner B. Distributable profit in the ratio 3:1 that we have given, 2,37,143. Let us round it off, and 70,047 to balance closed down, because credit balance is more, credit side is more, so we will get credit balance here. So grand total here is rupees 4,63,857. and balancing figure is rupees 4,03,857. For A, it is 8,27,143, and the balancing figure here is 7,47,143. This is the balancing figure. So this is how capital account is to be prepared. Now let us see question number 53. A, B and C were partners in a firm having capitals of rupees 50,000, rupees 50,000 and rupees 1 lakh respectively. Their current account balances were A rupees 10,000, B rupees 5,000 and C rupees 2,000 with a debit balance, whereas these two are credit balances. According to the partnership deed, the partners were entitled to an interest on capital at the rate of 10% per annum. C, being the working partner, was also entitled to a salary of rupees 12,000 per annum. The profits were to be distributed as the first 20,000 in appropriation of their capitals, next 30,000 in the ratio of 5:3:2, remaining profits to be shared equally. The firm earned a net profit of rupees 1,72,000 before charging any of the above items. Prepare profit and loss appropriation account and pass necessary journal entry for the appropriation of profits. So let us see the solution. So solution 53, we will see profit and loss appropriation account by net profit. Net profit as given in the question is 1,72,000. Now, appropriation of profit in the form of interest on capital for partner A, B and C. It is given 5%, 10%. So 50,000's 10% is rupees 5,000 for first two partners A and B, and C's capital is rupees 1 lakh. 1 lakh's 10% is 10,000. So it is 20,000 as interest on capital. Then, as given in the question, salary to C, rupees 12,000 per annum. And now the remaining profit, that now the balancing figure, that is the remaining profit, has to be distributed to profit. Fine. So 1,72,000 minus 32,000. So profit is how much? 1,40,000. But this profit has to be distributed in various ratios. And there are 3 ratios suggested. Proportionate we have to provide. So to partner A, I am writing it in the margin. So to partner A, B and C, you see the profit 1,40,000. First 20,000 is to be distributed in the ratio of capital. What is their capital ratio? Their capital ratio is 50,000 is to 50,000 is to 1 lakh. So it is how much? 5:5:10 or 1:1:2. So it is 1:1:2. So first 20,000 will be distributed in this ratio, and when we break it, we get 5,000 for partner A, then again 5,000 for partner B and 10,000 for partner C. Then the next 30,000 is to be given in the ratio 5:3:2. So when we pay this in 5:3:2, A gets 15,000 rupees, B gets 9,000 rupees and C gets 6,000 rupees. Then the remaining, so 50,000 has already been distributed. So out of 1,40,000, the remaining is 90,000. So when you break 90,000 equally, that is 1:1:1, each partner will get 30,000. So this way we have to distribute or allocate the distributable profit. In this way, A gets 5,000 plus 15,000 plus 30,000, that is 50,000 rupees out of rupees 1,40,000, and B gets 44,000 rupees and C gets 46,000 rupees. So we will close the format from below and this is how the solution is to be prepared. Now journal entries on 31st of March. So interest on capital account debited to partner A's current account and to B's current account and to C's current account. Why so? Because capital account is fixed. How do we come to know that capital account is fixed? Because current account balances are given in the question. So whenever there is a current account balances given in the question, then we have to assume or we have to take it for granted that capital accounts are fixed in nature, and therefore all the appropriation of profits will be transferred to partners' current account, not capital account. Being interest on capital to partners. Now second journal entry is for salary. So salary to C account debited to C's current account, and salary is rupees 12,000. Being salary to partner C. Now the last entry on 31st of March, transfer to profit and loss appropriation account. So profit and loss appropriation account debited, that is 1,72,000, that is the net profit, to interest on capital 20,000 rupees, to salary, that was 12,000 rupees, and then the remaining distributable profit to partners' current account, to A's current account, to B's current account, and to C's current account. And this amount were 50,000 and 44,000 and 46,000, being appropriation of profits. Now question number 54. Amit, Binita and Charu are three partners. On 1st April 2022, their capitals stood as Amit rupees 1 lakh, Binita rupees 2 lakh and Charu rupees 3 lakh. It was decided that they would receive interest on capitals at the rate of 5% per annum. Amit would get a salary of rupees 10,000 per month. Binita would receive a commission at the rate of 5% of net profit after deduction of commission, and 10% of the net profit would be transferred to general reserve. Before the above items were taken into account, profit for the year ended 31st March 2023 was rupees 5 lakh. Prepare profit and loss appropriation account and the capital accounts of the partners. So let us see the solution. So solution 54, by net profit as given in the question. The amount of net profit is rupees 5 lakh, and out of this profit, in the form of interest on capital, interest on capitals, we have to provide for three partners: Amit, Binita and Charu. And Amit's capital is 1 lakh and interest on capital is 5% per annum. So 1 lakh's 5% is rupees 5,000. And Binita's capital is rupees 2 lakh, 5% of which is rupees 10,000. And Charu's capital is rupees 3 lakh and 5% of which is rupees 15,000. So 530,000 is here as interest on capital. Then there is a salary to Amit. So to Amit's salary, at the rate of rupees 10,000 per month. So 10,000 multiplied by 12, it will be 1,20,000. Then Binita's commission. Binita's commission, about it is said that 5% of net profit after deduction of commission. So 5% of net profit after deduction of this commission is how much? 5 lakh into 5 divided by 105. Fine. And the amount is 23,810. So this we have to mind, because the language is after deduction of this commission. So whenever it is after deduction of such commission, then we have to multiply it by percentage divided by 100 plus percentage given. Fine. And then general reserve. So to general reserve, see, general reserve is an appropriation of profit. It is not a charge against profit. So it has to be shown here in profit and loss appropriation account. And 10% of net profit. So this is our net profit, 10% of which is rupees 50,000. Now the remaining profit will be given to the partners in their profit sharing ratio, and there is no profit sharing ratio suggested in the question, so it has to be equal. So here 5 lakh minus all the items given on the debit side, the amount here is 2,76,190. When broken equally to partner Amit, Binita and Charu, the partners will get rupees 92,063 each. And to Charu, we will make it 94 to round out the figure. So this is how profit and loss appropriation account is to be prepared. Now partners capital account. So by balance brought down, as given in the question, their capitals are rupees 1 lakh, 2 lakh and 3 lakh respectively. So it is credit balances 1 lakh, 2 lakh and 3 lakh respectively. And by interest on capitals, it is 5,000, then 10,000 and 15,000. Then there was a salary also. So by salary was paid to Amit 10,000 rupees per month. So it is 1,12,000, and there is no salary for Binita and Charu. And there is a commission. So by commission, there is a commission to Binita, and the amount is 23,810. Then general reserve is there, which is not to be distributed here, because general reserve will be shown in the balance sheet as credit balance to the liability side. And then the final profit, final divisible profit in their profit sharing ratio, and it was 92,063. $92,064 to round off the amount. And then we will prepare the closing balance close down, that is the balancing figure for all the three partners. And the amounts are, for partner Charu, it is 4,07,064. And for partner Binita, it is 3,25,875. And for partner Amit, it is 3,17,063. Now, all the appropriation of profit is transferred to partner's capital account, not current account, because capital account is fluctuating. How do we come to know that capital account is fluctuating? Because no current account balances are given in the question, first thing. And second thing is that it is not asked directly in the question to prepare capital account in fixed method. So capital accounts are to be prepared fluctuating always until and otherwise asked in the question. Question number 55. Yadu, Vidu and Radhu were partners in a firm sharing profits in the ratio of 4:3:3. Their fixed capitals on 1st April 2018 were rupees 9 lakh, rupees 5 lakh and rupees 4 lakh respectively. On 1st November 2018, Yadu gave loan of rupees 80,000 to the firm. As per the partnership agreement, the partners were entitled to an interest on capital at the rate of 6% per annum. Interest on partners' drawing was to be charged at the rate of 8% per annum. The firm earned a profit of rupees 2,53,000 after interest on Yadu's loan, which is a charge against profit, and during the year 2018-19. Partners' drawings for the year amounted to rupees 80,000 Yadu, Vidu rupees 70,000 and Radhu rupees 50,000. Prepare profit and loss appropriation account for the year ending 31st March 2019. So let us see the solution for this. Now solution 55 we will see. Net profit is given to us in the question, net profit, and we have to show the appropriation of this. So it is 2,53,000 given in the question. Out of this we have to give interest on capital, interest on capitals. Now this net profit is after charging interest on loan which is provided by the partner to the firm, and interest on such loan is a charge against profit which has to be shown in profit and loss account, never in profit and loss appropriation account. So we can just ignore that information here when we are preparing profit and loss appropriation account. And interest on capital is 6%. So to partner Yadu, Vidu and Radhu. Yadu, Vidu and Radhu. 6%. So 9 lakhs 6% is rupees 54,000, and Vidu's capital is rupees 5 lakh, 6% of which is rupees 30,000, and Radhu's capital is rupees 4 lakh and 6% of which is rupees 24,000. So here it will come 1,08,000. Now out of this much profit, 1,08,000 is given in the form of interest on capital. Now the second thing is that for profit and loss appropriation account is by interest on drawings. And the amount of drawings are given to us. So Yadu is 80,000 and rate of interest is given 8%, but date of drawings is not given. Whenever the date of drawings is not given, we have to charge interest only for 6 months. Now this amount is rupees 3,200, and the second partner is Vidu, and Vidu's drawings are rupees 70,000 at the rate of 8% for 6 months. At an average it is 2,800, and the last partner is Radhu. Radhu's capital drawing is 50,000 at the rate of 8% for 6 months. Amount is 2,000. So in this way we get rupees 8,000 as interest on drawings. Now when we add this, we get 2,61,000 on the credit side, and this will give us a credit balance of rupees 1,53,000, which will be given to the partners in their profit sharing ratio. So to profit, and their ratio is as given in the question 4:3:3 to Yadu, Vidu and Radhu. So when you break it, it will be 61,200 and 45,900 and again 45,900. So this way profit and loss appropriation account is to be prepared for the year. Fine. I hope you have watched the full video and you have understood the concept very well. Despite this, if you are having any doubt, then please put it in the comment section. Please do like, subscribe and share this channel. Thank you so much for watching this video.